Okay, in a few minutes' time, we'll be kicking off. All right. Okay, the rules of the class still remains the same. Please, we'll be interacting. I want this to be as interactive as we can make it be. If you have any questions, in order not to interrupt the flow or maybe break the audio, just type it in on the chat. So your Google Meet is a software I really, really love. I mean, it's a web application that makes things really very easy for us. I used to use Zoom before, but now, after a friend of mine introduced me to Google Meet, it's been very awesome. So, you type in your questions, then at some point for me to confirm that you are following, I'll ask questions like, do you understand? Are you following? Please do well to answer through the chat, through the chat channel, the inbox and all. So today is going to be a very interesting class. It's going to really be a very interesting class. And I want you guys to understand that this program is to help you guys to, get started on the right footing in trading. And trading here encompasses both forex and cryptocurrencies. Okay, the same method I use in trading my forex is what I use in trading my crypto. All right, and for those of you who are maybe faint-hearted, I think you will kind of prefer starting with crypto. Once your hands have become strong, once your appetite for risk has increased, then you can maybe delve into forex. But for the fact that I'm the one training and mentoring you guys, you don't have any problem with starting with any one of your choice. I can assure you that. I can assure you the strategies I teach, the mentorship I give, gives you an edge. All right. I've been doing this for a while now. I've been doing this for many years, and I can assure you that once you have that edge in the market, it makes you feel on top of the world. Do you understand? It's amazing. It's amazing, and that's what I want to, as a way to, give back. I want to grow this community and help a lot of people, become really financially independent. It's really a problem now. Look at. I don't know how many of you are following the parallel markets, the black market. Look at what Naira is doing now. Most of us who are salary earners, it's not even gonna get. It's not gonna be enough. That's the truth. The last time I checked, I think maybe it dropped a little today to 597. Dollar was above 600. The other day it was 620 for $1. So you ask yourself, like, how can you cope in this kind of financial? How can you cope with this kind of financial situation in this country? The only way, the best way, I won't say it's the only way. The best way is to know how to trade currencies, know how to trade crypto. It can totally alleviate. I'm not selling you guys on becoming millionaires, like all those things you see on YouTube. And no, the truth of the matter is, if you get to that level where, I mean, what you make from your forex trading or your crypto can pay for your water bills, can pay for your electricity bills, can pay for your rent, my brother, you are okay. Forgive the language, but that's fucking enough. I can assure you that, right? It's something that can really take off a large chunk of stress from you. So I want you guys to put in your next effort, put in your energy into things that we are doing. Like I said, today is going to be exciting because we're going to be delving deeper. So I think we have reached the quorum and we're going to just kick off now. All right. So I pity the late comers. Possibly they will make use of our recorded videos. All right. That said, how many of us have installed, because we're going to talk about that now, from next week, I'll be expecting those of us here to at least to be partaking in one way or the other in trading, in looking at the chart, in trying to put together what it is we are doing here, understanding it, and possibly placing some trades in the market and have a feel of what you like. So how many of us here has MetaTrader installed either on their phones or on the laptop? MetaTrader, whether it is MetaTrader 4, MetaTrader 5, whichever one. How many of us have that installed? I know we have not treated it here in this class, so I want to see if I want to see the number of persons that do have it. Then we can do a quick run through on how to install it. It's pretty easy. Get started with it. Okay, someone said I have it installed. Please, I need all the responses. I need responses. If you don't have it installed, if you've not traded forex before, please, this is your time to let me know. Beautiful. So another person said he has it. Who else? Who else? Okay, awesome.
I don't have it.
Okay, come again.
I have not installed it, but I will do so now.
Okay. I think so far only one person. Okay, not installed. P said not installed. Okay, Collins has it. Okay, that's good. All right. I'm going to send the link. I'm going to send the link right now. Remember, all this while we've been talking about brokers. For you to really start trading in the markets, you need a broker, right? Now, what the broker does for you is those trades. Okay, a lot of us here haven't installed it, so that means it's worth talking about. So what the broker does for you, like we've touched in our previous class, is those trades you are placing, those trades require what we call liquidity, right? Remember that you are buying money, you are selling money. So the liquidity there is the large chunk of cash that is equivalent to that which you are buying or selling that will now be, used to fulfill those orders that you've placed. That's what liquidity is in its simplest term. Okay. Now, the broker is like an agent. I think the simplest explanation is an agent. Let's say you want to buy a house or a real estate. You work with an agent, and the agent goes to the owner of that house and then intercedes, between you and the owner of the property, right? So that's what the broker does for you. So in this case, the owner of the property is a bank. Are you getting it? Now, what the broker does for you is the broker takes all your orders, gives it to the bank that provides them the liquidity, okay? That provides them with that liquidity, and then makes a commission from having your orders processed. That is just it. That's what the broker does. So for you to begin trading, you need a broker. And there are amazing brokers out there, but I currently I've tried a lot of them. And I will tell you that really, unless it is an unregulated, in fact, anybody that wants to eat your money will eat your money, whether they are regulated brokers or not regulated. But, most people, in order to have that kind of safe haven, feel safe, that feeling of safety, you want to go with a regulated broker, right? And there are different kinds of regulations in the financial community. You have the FCA, you have the SISEC, you have a lot of them. There are ones that, just for them to start their brokerage company really fast with little hindrance, they go to Cyprus. I think countries like Cyprus and Malta, the laws are not that stringent to starting businesses. So most brokers go there, especially, but not limited to, especially the ones that are trying to go for fraudulent purposes. Now, it's very difficult to have a brokerage system for America. That's why most brokers will tell you not to trade if you are from America, right? So most Americans trade with overseas brokers because it's the laws, the way the American laws are designed is such as to protect their citizens. And they have this very high barrier to entry in the financial market, where I think the minimum amount a broker needs to pay, or someone needs to pay in order to register a brokerage system, you have to deposit, I think, about $20 million or thereabouts, right? So that's quite an outrageous amount. So most people usually go to countries, London, Australia, and other countries where they have, more palatable laws for them to get started with their brokerage company. So right now I'm going to send you a link on the chat on our normal platform, where you guys will follow and register an account with a broker. I use Xness and IC Markets, all right? And I also trade what we call a funded account, right? I trade a funded account, and the broker the funded account uses is called Traders Global, okay? So that my personal accounts, IC Markets and Xness. I'm going to send you guys the link to the Xness, and because there are a lot of puppies out there. You don't want to give your money to the wrong person, to the wrong hands. Okay? So there are a lot of forex. In fact, let me tell you guys, scam few for forex. When it comes to forex trading, there are a lot of scams out there. Whether it's people trying to take your money in terms of investment, or whether there is people trying to just swindle you out of your money by posing as a brokerage company. There are a lot of scams out there, so you want to avoid them as much as possible. And what can help you is good knowledge. I'm going to find that now from your laptops. How many of you are trading from your laptops? How many are trading from your phone? Let's know. Is there anybody who is trading from? Okay.
From my phone.
Okay, phone. Who else?
I trade through my phone.
Phone. Okay. Good news says from laptop. Great. Okay. Okay. Good news also has it installed. Okay, nice. From phone. So a majority of us here, are trading from their phones. Okay. All right. Okay. So let's get started then. So I'm going to, okay, not trading yet, but I'm here via phone. Okay, good. All right, thanks for the responses. So let's highlight some of the things we will be covering today, and how it is going to help you guys to know, especially most of us here have they are 9 to 5, they are working, possibly they just want to use forex or trading to augment what they are earning. So you will always be like, forex is something that will always need me to look at the charts at all times. It's not going to give me time for anyone. That is a big fat lie. Let me tell you that. As a matter of fact, I trade what we call the New York section. In fact, pre-New York. Once I'm on my screen from 11:30, as a matter of fact, 11 a.m. That's why you see, guys, I say we always come here by 11:30, because my body has been designed to always come to my screen by 11:30. Okay, so from 11:30 to around 3 or 4 p.m., depending on how the market moves within the pre-New York and New York or NYXE section. So that is what I trade. So many a time when I get a good volume on what we call the pre-New York section, I'm already off on my screen. That is 11:30 to around 2 p.m. 11 a.m. to 2 p.m. Period. That's like 3 hours max. I'm off. I've made my profit for the day. I've made my loss for the day. Or there is no movement. I've made no trade for the day. I'm off. I wait for that exact time the following day. I will always, most of you that watch my WhatsApp status, I will always emphasize on what? Discipline. If you don't get started on the right footing now, it is going to be very difficult for you. The discipline has to be there. So let's highlight some of the things we'll be covering today. Trading sections. We're covering trading sections. We'll be covering news, fundamental news, fundamentals, just basically news. We'll be covering commitment or COT report. COT report, commitment of traders. Guys, mind you, anything I'm saying here or I'm teaching here is what I use. I don't have time for bullshit, all right? Don't have time for parabulation. Anything I'm teaching here is what I believe is going to help you as it has helped me. Commitment of traders report. And trust me, most of the things you're going to be learning here are some things you've not heard about before, right? Some things you don't know that exist that could actually give you an edge in trading. So we'll be talking about trading sections, fundamental news, COT, commitment of traders report. And remember the last time we talked about market structures, we talked about uptrends, downtrends, and sideways markets. Do we still remember that?
Yeah.
Beautiful. Now, today we are going to do what we call back testing based on that strategy that we learned the last time. The strategy of waiting for whenever the market gives us what? A lower low or a lower high, or a higher low or a higher high, and trade off from it. We are going to do a little bit of a back test and see what the results look like. And we are going to combine just two things. What we're going to learn today, which is the commitment of traders report. We are going to use it alongside just that strategy. And listen carefully, guys. This one that you guys are getting for free for today could actually, if you just stick to what I'm going to teach you today, only it, this alone can make you a 70%. In fact, let me not overrate it, 65-70% profitable trader. And I'm not mincing words. Read my lips. What you are going to learn today can help you trade the market profitably. So your eyes should be wide open, your ears wide open. Let's get started. So backtest, trend lines, backtesting trend lines, fundamental, backtesting trend lines, S and R, X and R. All right. So that is it. My screen is visible to everyone, right? Excuse me.
Yes.
Great.
I see you.
Okay. So let's try to trade them. Okay, first on trading sections. We have three major sections. The Asian section. We have the London section. And then we have the New York section. Mind you, there are other sections. We have the Sydney section, the Australia sections. We also have the Frankfurt, Germany section, but those are low volume markets. These are the three major sections that you want to choose one to trade, depending on where you are, right? Designing your strategy around any one of these sections is one of the things that could help you become really very profitable. Many a time, you will see markets will be trending up on the London section and it will begin to trend down on the New York section. Each section has its own characteristic. That is why you have to make a decision to choose which one you want to be trading on if you want to be a day trader. Unless you are working towards being a swing trader. A swing trader is one that leaves his trade running for like several days, 1, 2, 3, 4 days. Okay, while a day trader is one who opens a trade and closes that same trade, closes that trade that same day. All right. So you also have scalping, where you want to go in and out of the market as quickly as possible. Now, for this action section, when does it start? That's the question that needs to be asked. I have an indicator here that can tell you the start of every one of these sections. I have an indicator here. It's called sections. All you have to do is go to indicators on your trading view. You type sections. This one right here by JRFX Addict. JRFX Addict. That's the one you're going to turn on. You can see that I have already bookmarked it. So if you put it in on your screen, you will see it is color coded. And each color tells you the different sections that you have in the market. Okay? Let's check the settings for these sections. I just go to look at the sections right here on the left hand side of the screen. I clicked on the settings icon and it brings out this. You see Asia is the one that is colored blue, London is colored green, and New York is colored red. And you will see that the New York and the London has an overlap. It has an overlap somewhere around here. This is where the New York opened while the London is still running. So you expect a lot of volume in the market during that period when you have an overlap. Now, this is the Asian section. If we use this vertical line now to put at the edge here, you will see where it shows you the Asian section starts, right? Now, right here, this particular candle goes down to what time? At the bottom here, it says 22. 22 is like 10 p.m., right? Now, that 10 p.m. is actually pre-Asian section, not the real Asian section. Asian section starts around 1:30 a.m. Okay? It starts around 1:30 a.m. So all this time from this 22, which is when the London actually closes, to around 1:30, that is when your Asian section starts. And your Asian section closes just before the London section begins. Are you getting the point? This is around 7:30. Your London section then begins. London section actually starts around check the time here now. This is 8, around 8:30, 9 a.m. But pre-London starts from 6:30. Pre-London section starts 6:30. Okay? So when you come up on your screen in the morning, for those of us living in Nigeria, you want to be a trader, you can decide to trade London section, where once it takes 8 o'clock, you're on your screen. You are now trading that volume, that opening volume, what we call London open, from that 8 o'clock to around 10 a.m. 8 a.m. to 10 a.m. You want to trade off around that time. And you will see something peculiar now. I'm going to be moving back on these sections. You will kind of notice something really very spectacular on these sections, especially during the time they are opening. That is one of the things we are going to take very good leverage of. Okay. Now, look at the New York section itself starts around 1:30 p.m. Okay. But pre-New York begins 11:30. So I myself, I start around that pre-New York, all right? And I trade it inside the New York Open. I want to take advantage of the volume that comes into the market pre-New York and New York Open every blessed day. Do you understand? If the market is ranging like this, I assume guys must have seen this past week. I have barely made any posts because of the lot of news. We had a lot of volatility in the market, and market is yet to decide the trend that it wants to follow. So what I do is when I see that lack of volume, I stay out of the market. You don't force trades. If you force trades, that's when you're going to be having a lot of losing streaks. You want to stay out of the market when there is no volume and only trade in the direction of the volume. Okay, then we've talked about the Asian section, the London section, and of course the New York section. That is what you guys will have to cultivate as a habit. Which one are you interested in? Come every day on your screen. Spend 2 hours on your screen within that time section from that beginning. Every day you will be able to now learn how the candles move in that particular time frame. Trust me, the fact that you are seeing that candle's behavior at that specific time frame every blessed day is going to give you a very spectacular edge. It's going to give you mastery. And once you see the move coming forward, you know this is the behavior, then you now take advantage of it. Now, while we've said this, I want us to take a look at some of these sections, especially during the beginning part of it. Now, look at pre-London section here. Do you see the pre-London section here? How this massive volume came in the market. Can you see that, guys? Are we there?
Yeah.
Great.
Yes.
You see, we had
Yes.
this massive volume here, pre-London, and the London Open, look at another massive volume. Boom. After that, there was lack of volume. Now look at when you have, look at this time here. Look at this, this right here was around the pre-New York. You had a little bit of volume here. Then look at New York opening. Boom. Volume came down, but it wasn't sustained. And every other thing. So what you want to do, why market can be boring, is when one has not given time to study, when there is volume in the market. So most of the people will now be sitting on the screen during this kind of period when you see no action. Look at it. Look at these periods. When there is no action in the market, you will be there spending a lot of your precious time that you would have devoted to something else, maybe to family or something else, right? Now, if you master this, it's going to help you. Take a look at this. Look at where we have this volume. Look at this massive volume. When did this volume start? Let's check around. Look at it, guys. 11:30. I hope you can see the time at the bottom of my screen here. 11:30. From 11:30, boom, you captured this volume. And this volume started from 11:30 till around when? That's 13:00, which is 1 p.m., which is that what? New York Open. Check it out. Massive volume. How about during the London section? Check out again. Look at the London opening. It is what? Unidirectional. This is what you always want to take advantage of if you are sitting on your screen. You want to take advantage of a one direction in a particular section. London Open, market moved all the way up little, and then boom, during pre-New York, it's moved down. If you are someone that have mastered this, you would have taken good advantage of this. Now, let's check another day. Check this one out. London Open, what happened? Market moved up. See it here. London Open here, this color code, right? Then during New York, there's no much action pre-New York, but during New York Open, look at it here, around 1:32, boom, market moved down. No market effect, no much effect here, no much action here, right? Now, this might be a news or something. We have an unusual volume around this area. So let's keep going. London Open. Watch out this longer. Remember, I'm in the 30 minutes time frame. London Open, you had this massive volume. Now look at pre-New York. Pre-New York, are you noticing a trend here? Usually, when London opens, market moves in one direction, and the other section that opens, which is the New York, usually counteracts that direction. This happens at least as I've about 60% of the time in the market. Usually you have a massive impulse on one section and a correction ensues on the other section. So you just have to choose which section you want to stay in and trade. Once you capture that, look at this. This is a massive amount. And you guys already know from our classes here how to calculate the pip value. You can measure this move from here to here. This is a massive what? 60 pips. For the fact that you are making consistently 20 pips every blessed day in your screen, you are a big boy, you are a big girl. I can tell you that. Not to talk of having mastered this strategy where you can be hitting as high as 30 to 70 pips every blessed day. Now it's how much that translates to now depends on the risk you are taking, how much allocation in monetary terms you are giving to the market. Let's take a look at this again. One more example, or maybe two more examples, right? Check this out. Market opened here. This one is one of the markets that I usually love. Boom. London open, volume is down, and it maintained that downward movement all through the entire section. So if you decide to see, you don't chase the market. What I'm saying here is very important, guys. You don't chase the market. You have to be contented. The fact that you came out, you'd be like, oh, because I hesitated at the end of the London section, I missed all this move right here. I beg, don't ever have that kind of mentality. It's gonna cause more harm than good to you. It's gonna cause more harm than good. Okay, so take a look at this right here again. This is the Asian section. You see, you guys have noticed that I really don't talk much about the Asian section because I don't trade the Asian section. I love my peace. I know the pursue market. I can't stay up in the night just to wait for to trade the market. Thank God most of them, unless maybe I get to travel to maybe a country where each morning will not be, possibly morning and afternoon will not be the Asian section. Possibly, let's say I travel to South Korea or maybe to China or any one of those. I will start learning about the Asian section and their moves so I can take advantage of that. I have to get my 4 to 6 hours of sleep per day. So I don't sacrifice that in the market since I know that, okay, whatever thing I make on my New York section, I am contented with. All right. So that is the sections for you. This indicator here can be is quite self-explanatory. It's quite self-explanatory to tell you when the market begin in any of these sections, right? So that's more like it. Does anyone have any question regarding the sections we've just treated? Any question? Do you understand that? At least the takeaway from this is you know the time that this session starts, right? And secondly, you have to design yourself as a day trader to be trading only on one of these sections. Master one section, master 1 or 2 trading pairs, stick to that section, and believe me, in no distant time you will become a very profitable trader. One section and one section only. One section and one section only. You don't want to complicate the whole thing. Unless you are a swing trader, you have maybe some indicators you have designed that could help you monitor the price actions all around the clock. Okay, so the truth is you don't want to sit on your stream all day just watching charts. So you decide to choose one section. You can do what to choose the section I've chosen. I trade only New York sections. Pre-New York, New York, and I'm done for the day. I have ample time for my family. I have ample time to entertain friends and all that. That is the advantage of that. Then learning about 1, 2, or maximum 3 currency pairs is going to help you understand those currency pairs in and out, such that if you miss a trade on one, you know that you miscounted or misjudged. You can hardly miss the next direction. That is the advantage of learning just about 1, 2, or maximum 3 currency pairs. All right, it's going to help you a lot. But if you're someone that is pursuing currency pairs, you have several currency pairs you are trading, guess what? If you lose a trade on this one, you go into the second one and lose another one, that losing streak could continue. But if you have only one pair you are trading, you enter the buy and it hits your stop loss, you watch the structure. Oh, it hit my structure, it hit my stop loss because the structure has changed. That means if the structure has changed, it should not continue the direction in the opposite direction. You wait for an entry, you don't jump right in, you wait for an entry and then make that entry. Believe you me, 90% of the time it will always be a win. So your trades could be 10 trades, 1 or 2 or 3 losses max, and you are winning 7. And these wins you are making the wins with a very high risk to reward ratio. What else is profitability? It's as simple as that. So this is trading sections for us. Does anyone have questions on trading section? If you have any question, ask. If you don't, okay, someone say, can you repeat how to turn on the section? Okay, I'm gonna do that. Any question? Any other question? Okay, in the absence of question, I believe we all understood it. So I'm gonna repeat how to turn on that section indicator right now. Let's go back and do that. So what you have to do is, let's remove it from the screen first. So my section indicator is off right now, okay? It is off. To turn it on, I go up here on the indicators tab. I click on it and I search. I come to this search box here and I search for sections. Section in plural, sections, please. Sections, okay? There are a lot of sections there. There are a lot of sections there, right? You will see this one. I'm going to try this one later on. A lot of people have used it. This one's here. But the one I use is this one right here. You can see the one that has 930 uses. You see, this is JRFX Addit, okay? Sections. That's the one you want to choose. That's the one I use. If you hit on it, once you tap on it, boom, it comes right here on your screen, giving you color-coded sections on your screen. One more thing, guys. One more thing. This is very important. Setting up your trading view is very important. You have to set it. If you are watching from Nigeria, you have to set it to your time, to your server time, so that what you'll be seeing here on this time will correspond to the time on your clock. And how do you do that? Take a look at this bottom part now. Follow my mouse. You see where you have this time zone at this bottom right edge of the screen. This time zone, click on it and look for the time zone of where you are. If you travel to South Africa, if you travel to Asia, wherever you are, find the time zone here. Nigerian time is this one right here, UTC, the Universal Time Converter +1. So in Lagos here, I'm just tapping in Lagos, right? So if you are in America, you are in US, depending on where you are in US, because several states, different states in US have different time zones. If you're in Los Angeles, you are going to be using what? The UTC. UTC is the same thing as GMT, okay? The GMT time. So they are using GMT -7. If you are in Denver, UTC -6. In New York, it's -4, right? So New York is like 5 hours behind us. So that is why it is -4. So you have all the countries here and their time. So you want to, first of all, set yours. By default, yours might just be UTC. So you have to set this to reflect the current time on your screen. So once you do that, you look at your time zone. And then with this time zone, if I am trading only New York, I don't want all of these time zones to be on, okay? You can see the blue color, the green color, and the red color. And right here that you see orange, it is the overlap of the green and the red, which is when the New York opened while the London was still running. Okay, so that is this orange here. So the um, New York, the London section closed somewhere around here. The New York began here. So in between here, the London was still on and the New York has opened. So that is why you have that orange color there. So if you are trading, say, only London and New York section, all you have to do, come to the sections and remove Asia. Come to the sections right here on the left hand side of my screen, click on the settings, uncheck the Asian button, and it removes Asia from it. Okay, so you only have the green and the red, the London and the New York. If I'm trading only New York, I'll remove London. Okay, now I have the what? The London. Does that make sense? Beautiful. Then,
Yes.
if you are trading pre-London, remember that the beginning of this time does not capture pre-London. I want you to note it on your notes, on your books now. Pre-London begins at 6:30 EST time. Let me not use all those complex time zones. Let me just use our Nigerian time here. So it starts 11:30 a.m. Nigerian time, okay? 11:30 a.m. Nigerian time. That is it. So I urge you, if you want to trade the New York session, come to your screen by 11 and start watching this. Start placing your trades from 11:30 a.m. Believe me, you're going to capture a whole lot of volumes, a whole lot of volumes in the market within that time. Another time that usually have big volumes is the NY exit. Remember, you have your New York section, which is the currency trading for New York. And then you have the New York Stock Exchange section, which is NYXE. These guys, these two different time sections open at different times. And the New York Stock Exchange is the one that opens later in the day, which is usually around this uh, towards that's around, was it 2:30? Yes, around 2:30 p.m. Yeah. So that's when you have that New York SE open. You also have some volumes then. But the major, from my experience, the major volumes are the ones I have mastered, which is starting between the pre-New York, going into that time the London section and the New York section overlap. So you have a lot of volume that will drive the market towards the direction if you get it right. Remember, you make money here based on how much volatility you can capture. All right, that said, I think that drives the information home about sections now. Are we there?
Yes.
Yes.
Beautiful. So let's move to the next thing we have on our agenda right here. Boom, boom, boom. Okay, so fundamentals. Now we'll be talking about fundamentals. What is the first thing you need to do each day you come out to trade? You need to check whether there is any news. Markets, you have two different ways of trading the markets. You have what we call, of course, the technicals, which is what we are learning. Technicals, then you have the fundamentals, okay? I like simplifying things. You guys can do research and read more about fundamentals, but I'm just going to give you the relevant information. I hate cock and bull stories. I'm not going to teach you how non-farm payroll works. I'm not going to teach you how unemployment data works. I'm not going to teach you how housing data, housing permits, and all of those things, building permits works. What I'm going to show you is where you're going to see this information and how to interpret them and the effect it has on your trading. That is what I'm going to do, and that is what I believe is relevant. But as a student of finance, please do well to go and research and read more about those things, because what this finance does for us is not just learning about the trading. Yeah, we want to do the trading, of course, master and make money from it, but you just want to understand world news. I will always tell my students, my VIP students, they are very much aware when Brexit was ongoing, at that heat of the Brexit news, then we so much made a lot of money from the pounds, right? Because pounds, because of that volatility, because of that uncertainty, pounds was unidirectional. Each day you come, you know the market is okay, it's going to be falling. So if it is going up temporarily, just exercise patience and wait. Once you see that trigger when it begins to fall, enter. It flows with you. You are swimming. I don't know how many of you guys swim, but you know if you swim against the tide, my brother, it's a big wahala for you. But when you are swimming in the direction of the water current, it's so smooth, smooth sail. And that is exactly what you want to be doing here in trading. So, which other news? Coronavirus. Coronavirus news came around because of the fundamentals of it, right? We were able to see, boom, this is the effect it's going to have on the currencies. There will be a lot of panic. People will want to be looking for safe havens. All markets crashed. BTC, crypto crashed. All those other currency pairs crashed. This was a shock to the market. Now, if you are a long-term investor on crypto, that is when you would have picked up all the crypto you had. Most of the people that invested with on crypto with me, that was the time I picked up a lot of cryptos for them, and we rode that wave all the way through. That was the time, the very first time I ever made 700 pips in one day, and that was from Euro US dollar. I don't know why. Normally, I would have just caught the trade, but the impulse was so much, and I was just trailing it, trailing it, trailing it, trailing it. 700 pips in one day. It doesn't happen often, but it's a good knowledge of understanding of the fundamental news that will help you do that. Now, there is another fundamentals you will see here. If you look at gold, if you look at GBP pounds, let's take a look at gold right here. Let's take a look at gold. Now you can see this thing I drew on gold. That was an entry for me. Look at it here. This is a strategy I use, which this is not yet time for me to tell you about that. On seeing this and on seeing the break here, I knew the market was falling. That was my entry. Right up here, this was my entry. This was my stop loss. And the next zone was my take profit. First take profit. What is that next zone? Right here. Right here. Up here. All right. And how many pips did this make me? This was where I entered. From here to here, guys. This was about 120 pips. Because I expected that once it hits this next zone, of course, it should correct. But what did it do? It smashed this zone and went straight to this next zone. However, I was not there to capture it because I was done for this day. I was satisfied and I left. And that was just it. Captured this and I moved on. Now, why did I bring the gold out here? There was a news. We had a very big news. This past week has been some very strong news in the market. And how do we check this news? That is where we are going into now. Remind me to get back to gold. We are going to check the impact of this news we are going to examine now on gold, okay, and check it on some other currency pairs, especially the USD currency pairs. Okay, so what does fundamental do? From what I have been saying here, you would have understood that the fundamental tells you about, news events, political news, right? Economic news that affect the currencies. Because people have a way to react to what? News. They either panic and protect and hedge their positions, and that has drastic impact on the currency pair. So, what are the kind of news that we check and where do we check those news? That's the very first thing we need to examine now. So I'm going to shift my, for you to check the news each time you come, like I told you guys, the very first thing you do is open the news and check. You go to what we call Forex Factory. That's the best. We have investing.com, okay? But Forex Factory is the best that I use. Forexfactory.com. So I'm going to open it up now. you can as well check it up on your own. So let's switch the tab to Forex Factory and see what it does for us. All right, so let's go here. This right here. Beautiful. Okay. So I believe we can see the screen now, right? This is forexfactory.com. If you open forexfactory.com by default, it comes this way. You see a lot. You see this in this manner. This is the home page for your forexfactory.com. So what you want to do is to go to this tab here. This tab called the calendar. Okay. Click on the calendar tab. Once you click on the calendar, it will now give you the news, the fundamental news that is expected that very day. Now, as you can see, mine has already been filtered to the important news, the ones that really affect the currency. So let me just get it back to default. So you will see how you will get it on your own. Let me just turn on everything here. Let me turn on everything here and apply filter. Beautiful. Good. So by default, you will see your own in this manner. Look at a lot of news that you have here. Like for this particular week that just ended, we had what? On Monday, you have a lot of news for the CNY, the JPY, and we know some of these currency pairs, your the Yen, the Japanese yen. What do we have here? Final manufacturing PMI, PMI production manufacturing index. You have MI inflation gauge. Like all of this, like I told you guys, I'm not going to be explaining them one after the other what they mean. Okay? Research them, find out what they talk about, find out how relevant the data is. But what's important here is this. All of these particular news that you see here, the ones that are not red, do not have significant impact on the currency. Does that make sense? The only ones that you want to be looking at are the ones that are marked red. And if you go all the way down here, okay, it's not here. It's not here. You would have seen a legend that tells you that the red ones are the ones that has the highest impact. Okay, and that is the ones you want to be looking at. For instance, that very Monday by 3 p.m. a news was released, an important news, ISM manufacturing news, right, on production. So that is the only important news for Monday. On Tuesday, you have 3 powerful news that affected the Australian dollar. 1, 2, 3. Okay, you even have another one that affected the US dollar, the job openings at 3 p.m. Now, the question you will be like, there are a lot of news here. How do I decipher and, filter the information I need? First thing is this. You have to filter the important news first. The important news, that is the red ones, by going to filter on this top right, click on filter, uncheck these other ones here. If you hover over them, they will tell you the kind of news they are. Like this, the gray one here is non-economic. You uncheck it, we don't need it. This one is low impact. Do you see that? Low impact expected. So it's not going to affect the currency direction as much. Uncheck it. Medium impact expected for this one. You uncheck it. We need the high impact news, the one that will affect the market's volatility much. Uncheck this one, and then look at the one that you have to leave here, the high impact. Once you've unchecked all of these, click on apply filter. One more thing you need to do, remember time zones are really very important. If you open your own by default, the time zone might be US time. It will be GMT -4. So you want to switch to our normal time zone, and you do that by going up here. You go up here, this place that you have the time, click on it, all right, and then select GMT +1 from this list. Okay, so as to set it to our normal Nigerian time. Once you do that, click on Save Settings and go back to calendar, just like that. Now you see all the important news have been filtered out for us, right? So on this day, we have the USD, 3 p.m. Market is going to be affect. Let's see what happened. Let's now check a USD pair and see what happened by that 3 p.m. So by 3 p.m., a high impact news was expected. And look at this, guys. What you want to look at is how do you read this news? How do you read this news? That's the important thing. Whenever you see the red here, the red means bad for the currency. This is important. This is just what you need to understand here, nothing more. Whenever the data here is red, it means that it is lower than expected. For instance, the previous data here says what? 57.1. That is the previous. The forecast value is it will increase to what? 57.5. However, the actual value was below par, was below what was forecasted, 55. So this was bad. This was below what was forecasted. Now, in this case, for this Australian dollar, previous value for this particular data, the cash rate was 0.1%. Then it was expected to increase to what? 0.25. But guess what? It outperformed that which was forecasted, 0.35. It was green. So red is bad for the currency, green is good for the currency, right? Now, why do I say bad and good for the currency? It is at that instant, please, for those of you that may decide to be trading news, it is at that instant that this volatility will affect. It doesn't hold much water in the long run. The technical analysis will always supersede the fundamentals. But whenever the technical and the fundamental marries each other, it is so damn awesome. How do I mean? Take for instance, market has shown you on the higher time frame that it's trending up, and in the short time frame, the news was released that will make the market to move down, right? That will make the market to move down. Guess what happens afterwards? After that market has moved temporarily down, respecting that news at that moment in time, it will start to go up again because of the technical structure. Market structure always moves. That is why what I teach my students is an adept understanding of market structure, and that combines Elliott wave analysis, other blocks, and a lot of wave theories to help you understand precisely what the market does and where it's going to head to. Okay, so for this news, let's check the impact for this particular one. Now, this was released when? This is 2nd of May, and it was released by 3 p.m. So let's go to our chart and see how USD pairs were affected by this news. And the USD pair that I'll be looking at is possibly GBP USD and what? Please turn off your microphone. Turn off the microphone, please. Thank you. All right. So let's go to the chart. We'll be looking at the USD pair, GBP USD, and we'll also be looking at gold, because gold is paired with the United States dollars. All right, let's switch. Let's make that switch now. Remember, the date is 2nd of May, Monday, and the news was released 3 p.m. All right. Let's look at our chart. Okay. We are in gold already. Let's try to track gold. Where is 2nd of May on gold? 2nd May on gold. Okay. Look at this, guys. This is 2nd May. 2nd May began somewhere here. Good. This is 12 a.m. 2nd May. Let's look for 3 p.m. 2nd May. We are still on 2nd May. 15. Beautiful. So 15 is 3 p.m. Is that not so? Are we there, guys?
Yes.
Beautiful. Now, what was the trend here? Look up. What was the trend here for gold all this while? Market was trending down. Market was massively trending down in this manner. Is that not so? Was massively trending down in this manner. But guess what? That data that was released for US dollar, that data that was released for US dollar at 3 p.m., what was the result? Was it a red or a green? Do we still
Was
remember?
a red.
It was a red. Beautiful. That is, it was less than expected. Therefore, it is bad for the currency. Do you understand that?
Yeah.
Now, if a news affected the currency badly, that the value of that currency, will it go up or will it go down? The value of the currency, will it go up or will it go down? That's the question. Answer. The value of the currency, will it go up or will it go down?
It will go down.
Beautiful. The value will go down.
Yes.
Do we all understand that? Yes. Great. Now, guess what happened? If the value of the currency is going to go down, let's assuming that that currency is paired with another currency. In this case, let's say gold. Okay? If, let me use an arbitrary figure here. Let's assuming that before the news, one pound of gold can be purchased with $10. All right? Now, after the news, we saw the news affected the dollar badly, meaning that the value of dollar is now down. In that case, are you going to need more dollar to buy gold, or are you going to need less dollar? Are you going to need more than $10 to buy one pound of gold, or are you going to need less than $10?
More than $10.
All right.
Because dollar has gone down.
Which you're going to need more than $10. Is that not so? Beautiful. Then, what does that tell you? It tells you that for a gold pair, for a USD pair, for in this case now, gold to United States dollars, right? At that moment in time, will the market for gold USD, will it go up or go down? Because you now need more dollars to buy gold. Is that not so? So will it trend up or trend down as a result of this news?
Since dollar has gone down and you need the trend you need to go down, that is selling.
It will go down.
I'm gonna take this question again, please. I'm gonna take it again. This pair, this chart we have here, right, shows us how much dollar you need at any point in time to buy 1 ounce of gold. But I used pound to make it, easier to understand. 1 ounce of gold. For instance, at this level here, at this current level, you need what? This dotted green. You need $1,883 to buy 1 ounce of gold. Okay. Now, if the price of gold goes up, what does that mean? Gold now has bigger value, more value. And what does that mean for the dollar? Dollar has lost its value. In this case, you're going to be buying it no longer at this current price, but something higher. That is, the market will be moving up, right? Something higher. Maybe something like $1,900 for 1 ounce of gold. So you have a news that adversely affected the United States dollars. Will that news make the dollar, the gold dollar pair to go up or to go down?
Okay, it
It
will
will
go
go
up
up.
in this case. It will go up because
Beautiful, it will go up. That's what I want, because the impact of the news says that USD is bad though. Are you getting it, guys? US dollar is bad though. Therefore, at that moment, the market will react impulsively and they will now be buying the gold with more dollars, because the dollar at that point in time has lost its value. Now, remember the time was released 3 p.m. Nigerian time. And if you come to the chart right here at 3 p.m., let's locate it, 2nd May, 3 p.m. This is 2nd May. This is 13:30, which is 1:30. This is 14:02. This is 2:30. And this is 3. Guys, do you see this green candle here is 3 p.m.?
yes.
Does this make sense now?
Yeah.
So when that news was released, even though the market structurally it was trending down, that news that was released is what made this guy to move this up. So after like 30, 35 minutes, 1 hour, 2 hours, the impact of the news is over. Markets continue to move down like it was structurally. Do you understand this, guys?
Yes, so
Good. And that is just it. At that moment that news was released, markets became green, pumped up, boom, boom. And if you were there, let's say you want to trade this news, you already have a structure
baby.
right here. We already have a zone here. We already have a zone, a support and a resistance zone. And we had a high right here. Now, guess what? When the market pumped up, you would have missed this one. But once it pumped up and broke this one, this high right here, you would have entered this trade and you would have captured at least this. Look at this small move. That's why gold, I love gold. Look at this small move you see here. This is what? 647. This is 64.7 pips. This is amazing. Now, let's assuming that, okay, you actually waited for that candle to finish before. That is, it went all the way, and then on the close of this candle, that is when you exited. On the close of this candle, my dear, you made 53 pips here. And these 53 pips, if you traded it with what? A mini lot size, that is $53 for that single trade. If you traded it with a standard lot size, with 1 lot size, that is $530. If you traded it with 10 lot size, that is $5,300, depending on your risk appetite and your account size. That is how this market works. Okay? Now, let's take another impact of news. In fact, let's check GBP USD at that same 2nd May 15. GBP USD, let's see if that will work. If it respects the news as well. So switch to GBP USD. So this is okay. Let's go there. Look at this. This is 2nd of May. Watch. This is 14. Market is heavily trending down. No, guys, be watching this. Market is heavily trending down. This is 14, which is 2 p.m. This is 2:30 p.m. and this is 15, 3 p.m. Look at what happened. Most of you will be like, I'm still seeing red sign. No, watch the price action. Forget about the color momentarily here. Watch the price. Do you see that the market pushed down all the way here? Is that not so? Are you following?
Yes.
And because of that news that was released, since we are not watching it in real time now, this market pulled back up from this bottom. It pulled back up from here to here, like this. It didn't stop there. The next candle, it continued to pull up here. But because of the market structure is too strong for it, it could no longer hold it. it stopped at this resistance zone, and that's why it rejected again and closed red. In fact, if we go to a lower time frame, we'll see this move much clearer. Let's go to a lower time frame. Let's say to 15 minutes. You will see the green candle that you might be expecting on that 2nd of May, 15. So if you go to the 15-minute candle, let's pull all the way back to 2nd May. This is 3rd May. Let's pull back. Let's pull back. Good. Beautiful. Guys, do you see it now? Do you see where I marked out now? Do you see the impact of that news? Exactly at what? This is at 15:15, which is at 15 minutes past 3 after the news was released. That market did what? Moved up from here to here as a result of that news. And that is it. That is how the news happens. And after the news, the dominant downtrend still took over and market started to move down as it were, which is the power of structure. You've seen the impact of the news and you see the power of the structure. Irrespective of the fact that the news says, this thing should go up, but the structure dominated. And after that small move from the small move from the news, the market structure dominated and the market continued to trend down. That is the news for you. So what usually would you do? Now the question is, how do you possibly take advantage of? In fact, before we talk about this, let's take a look at the news that happened for this our week. This, I think yesterday we had major news on Wednesday and on Friday, which was yesterday. So let's check our Forex Factory again and see the kind of news that were released. Some of the powerful news that we have there. We had okay. Let me switch to this. Okay. Yeah. All right. So take a look at this news. This was on Friday. We had a lot of high impact news on Friday. One of which is the what? The non-farm employment change and the unemployment rate. Two powerful news released at the same time, 1:30 p.m. Okay. Now, on Wednesday, we also had another powerful news, which was the what? FOMC statement. This one doesn't have data. That's why I said take out your time. I think the people in the VIP group is the people I take out time to explain how every one of these was, kind of expanding their horizon with finances, the financial news and all that. How you can listen to CNBC News, CNN Business, and all of that, and make take advantage of the things you heard in the news. I don't know most of you if you even have your Twitter. I think most of us, possibly crypto, have led you to Twitter, but usually limited to that. There are a few other things you should be looking out for your Twitter. News, tweets, business, financial news tweets can really keep you on the edge to know what could happen before it actually happens in the market, and then you can actually be in the position earlier than that. So right now, FOMC, we call it the Federal Open Market Committee. These are the people that decide what happens to the interest rates of your Federal Reserve, the United States dollars and all. Okay, so the FOMC news, I think we know the Powell. I don't know if we know the chairman there. So the news was released. As you see here, you don't have any data, so you don't know how to interpret it. In this case, you should actually go look for headlines, all right? In this section called news, you actually go look for headlines. Not only do you look for headlines, you also listen to what people are tweeting that day to be able to decipher the major takeout from the news that is being released in this kind of case, because this is the chairman of the Federal Reserve coming out to make a statement. And remember, people are listening to whatever he's going to say. Anything that he's going to say is going to drive the market. So when you come here at that day, you could look at the news headlines here. So the news lines will be catchy enough to tell you what he's going to have. So you can say, yeah, this says Bullard repeats Fed should get raised to 3.5 in the coming quarters. So it is anticipated that the interest rates are going to increase for the US dollar, which is going to make the US dollar, um, you know, strong, right? So, but there is a certain level they said is not going to get to. Anyway, I don't want to get into that. Maybe your research is going to take us too much time to understand the rudiments of the news and all that. But understanding how the interest rate plays a role on the finances, on the currency pairs, is going to help you a lot. So in this case, let's take a look at the impact. This was released 7 p.m. Let's take a look at the impact on USD pair. My favorite USD pair, of course, is gold. So 7 p.m. May 4th, what happened? And please, let's take a look, because we're not going to be coming back to this again. Let's take a look at this on May 6th, 1:30 p.m. on Friday. So we are looking at the impact of these two news, okay? One is the FOMC, which was released on 7 p.m. and the federal funds rate. Then the other is what? The 6th of May, the non-farm employment. And if you look at the non-farm employment here, it is green, good for the currency. Do you understand? Good for the currency here. But there are a lot of conflicting news here. So you'll be expecting up and down movement. While the unemployment rate is bad for the currency, the non-farm employment change was good for the currency. So this one is a day of wahala. Ranging market will spike up, it will spike down, spike up, spike down. We're going to see how all this behavior right there in the chart. So let's get to the chart now. First, 4th May, 7:30, and then 4th May, 7 p.m., and then 1:30, 6th May. All right. So let's take a look at that. Okay. There we go. Beautiful. Now, let's go to gold. Let's go to gold and let's take a look at the first one, 4th May, 7:30. 4th May, this is 3rd of May. Beautiful. Guys, watch this. And you will see the behavior of the market before the news is being released. News usually gives the market the impulse it needs. Look at this day. This is 4th of May. We are looking for 7:30 p.m. 7:30 should be, of course, 19:30. 18 is 6. So 19, beautiful. That's it. That is right here, guys. Watch it. Now, do you see before the news how the market was misbehaving? Do you see how the market was ranging here, right? But once it was 7 p.m., which is 19:00, and 7:30, look at that massive impulse in the market. Check it out, guys. This trade alone, this single trade alone, brought in about $2,000 on a personal account and a whole lot more on my investor's account. This single trade. Because I knew that irrespective of what the market does, once this high is broken, it's going to fly up. Why? Because structurally, look at this, guys. Remember what I told you guys at our initial class, that market moves in what way? Impulse, correction, and impulse. Is that not so? Do we remember that?
Yeah.
Do we all remember that whenever market moves in an impulse, it experiences a correction, right? And then what's the next thing? Another impulse. And I told you guys that for every impulse, there is another impulse. Even if it is downward impulse, there is another impulse down. I made mention of this in the last class. Now, see right here. Check something out here. For gold, market has been trending down before now. To show you how, what I'm trying to show you is how the fundamentals and the technicals align to give us this massive return on investment. Market has been trending down here. Look at it. Boom. Market has been trending down right here. And look at that move that broke that trend line. What's that move that broke the trend line here? It was this move here. This one that moved from here to here, from this bottom part to this part. That was the first impulse. So every other thing that has been happening right inside here was the correction to this impulse. So I was expecting what? Another impulse. I knew that the news was going to drive the impulse, right? So how do we then take advantage of it? What I did was place a buy stop. There is a trade we call, how to place a trade we call a buy stop. I think we treated that. We're still gonna treat it in more detail when we begin to place trades. I placed a buy stop right above here, okay? And then I placed my stop loss because, of course, this is a zone at the bottom here. This right here is a zone, a support, isn't it? This right here is a support. So if market for any reason breaks this place, I have no reason to be buy biased again. That means it's going to continue to go down. Do you understand? So for the fact that market is still above here, I believe it's going to go up. So that's why my stop loss was somewhere around here. Then, lo and behold, the truth of the matter is, do you see this? I wasn't looking at the screen because this was off my trading time, but I want to take advantage of this news. Watch it. This is 7 p.m. Okay, so I placed this and I placed this here. I was already willing to lose $500 on this trade. Do you understand? That is why if this market has moved down here and spiked and hit me here, I would have lost $500, and that $500 is about 0.5% of my account. Do you understand? So I was already at peace with it. Whatever happens, all die and I die, lose $500. But I know that the potential is way bigger than the sacrifice or the risk. Okay? Now, in this case, for this particular trade, the buy stop was here, the news was released, and we saw for that news what it gave to us. Was it for that 4th May? Let me do a quick check on it. Okay, there was no data released. So that impulse, the market gave us something that showed that the US dollar is going to lose its value with respect to the what? The gold. That is the result. That's the interpretation of whatever the man said that day. Okay, and lo and behold, this guy broke this zone. Boom, the first impulse broke this zone right here. This was this first candle that broke it exactly at that 7 p.m. Do you see that? Now, if the truth is, if I were on this screen when this thing was executing, this spike down here would have scared me, especially if it had broken this low of this candle here. But I was off my trading section then. That was why it was even advantageous for me. So I actually thank God for not sitting on my screen, because I'm very, very quick with risk management. So as this thing has gotten up here and it begins to break, in fact, I would have exited this trade when it has broken this low. Yeah, if I were on the screen watching it. Do you understand that? If I were on the screen, once it broke the previous candle's low, I am already off. I would take, okay, I would have been in a small profit actually. Yes, I would have been in a small profit. Okay, but since I wasn't on the screen, it spiked down and still moved in my direction, and it didn't hit my stop loss. So it was a very much profitable trade. And this is the result of news. You can see the impact of that news within that time frame. Look at it, sweet, boom, 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 up. Okay, and once it's reached this rejection level, that was exactly where my take profit was set. I took my profit. So all these other moves I left for the market for that day, because all this happened very early in the morning. Okay, so that's that for that. The next thing we want to check, and this thing now is also replicated in, I believe, in other pairs. Like if you check the GBP USD, 4th of May, 7:30. Let's take a look at that. GBP USD, 4th of May, 7:30. You can see that right here, guys. This is 19. Okay, now you will still see this one. You had a zone before the news. You've already marked out this zone in the market. Look at this zone right here. This is a resistance. And look at this green candle here at that 7. That was the candle that broke this. Are you getting it? And on breaking it, what's happened? Look at it. A sweet move all the way up. Now, do you see what I said, that market moves, especially driven by the news, are short-lived? What do you see happen the following day? All of these big moves here did not continue for the for the currency. They still all went down and even broke further down and started moving down even much further. Like, it's crazy. So when you have a news in the market, take advantage of it within the first 1-2 hours of that news being released, because after that the impact of that news is most likely, in fact 80% of the time, going to die down. That is it. And let's go back to gold, and the final one that we want to look at is the one on May 6th. On May 6th, we saw, if you guys are on your Forex Factory, it was released 1:30, and we have a lot of conflicting news. One is green, one is red, another
Please,
is
I have a
red.
question,
Like,
please.
market should be
Okay, why I would
Alright,
like
alright.
why I would like to ask the question now is because we just left the GDP US dollar. Just bring it up again,
okay.
please.
Yeah, yeah. Beautiful.
Yes, as you were explaining under this GDP US dollar,
Yes.
yes, the market actually broke the resistance and moved all the way up.
Yeah,
Normally, if one is placing the, because this scenario, I am usually stuck under this scenario. Normally, if I'm placing a trade, as
Yeah.
from my analysis,
Yeah.
I would suppose it should go up. Fine. Now I'm placing my stop loss
Yeah.
would be at this, maybe at the support level, somewhere exactly.
This
Now,
low,
but as you
right?
can see, even though yes,
It
took me
took you
How
out,
do I
isn't it?
react to this kind of a thing?
Perfect. Awesome. If I were in this trade as well, it would have taken me out.
Okay.
Are you getting the point? But guess what? I will not patiently wait for this candle to finish. And as it finished in this part, what do we call this kind of candle? This is a hammer.
Yes.
Is that not
yes.
so? It has hammered out a bottom. What it shows me is that this was just market manipulation. I've been taken out at whatever stop loss. What I will then wait for is the break of the high of that hammer, and I'm in on the trade again. And being in on this trade again, I will now put my stop loss below the candle, the previous candle, which is this particular candle right here. And once the market moves in my direction,
Yes.
are you getting it? And completes that first candle, I'm going to now move my stop loss to the low of that currently finished candle.
Yes.
Does that make sense? Yeah. So that's how we would have regained whatever has been lost in this trade and still take advantage of the move.
Oh, thank you.
All right. Okay. So let's do we have any other question? Any other question? Our time is, we are almost getting to the end of our time. So let's see, we can cover one more thing, one more concept. Or we can keep the okay. Let me check for if people have typed out any question. Any question? Okay, someone. Good news. Were you the person
Yes,
that asked the
you just
question now?
answered it.
All right. Okay, so let's forge ahead. Let's proceed. The next thing that we'll be talking about now, I believe the concept of news. Okay, we've not looked at the impact of the news when they. Okay, yes, that's what we want to do. Sorry for that break in knowing where we currently are. So we are looking for the news now on May 6th, on Friday, when the unemployment rate was published. Unemployment rate was negative for US dollar. It was red. Non-farm employment change was what? In fact, just to give you guys a sneak peek, when you hear of non-farm, it means every other secular work that is not farming, just like your normal civil service, your normal jobs, okay, office jobs and all. So that's why it is called non-farm. So let me just put it out there for you guys to, know. So non-farm was positive, this was negative, this was negative. So let's see how it impacted the US dollar that day. 6th May, 130. Let's go check it out. So this is 6th May. Where is our 6th May? 130 should be 1330. This is 1315, 1330. Guys, do you see that? This is it here. Are you there with me? This is 1330, which is 1:30 p.m.
Yes.
Do you see one news was positive for this currency, for USD? It spiked it up. The other one was negative. It did what? It spiked it down. And all of this, there was no directional movement. Market was just messing around here. Do we understand that, guys?
Yeah.
Market spiked up here when news was released on this on 1:30, and then look at that move down, boom, right there. Are you getting it? Now, this market, to be honest with you, I lost a little bit of money here. Okay, I lost money here because I believe whenever market, look at this. Let me show you why I lost money. There is a pattern we call a head and shoulder pattern, inverted head and shoulder. All right, this right here is a shoulder. Okay,
Sure.
this right here is a shoulder. This is a head. Now, once this neckline is broken, let me use a normal line. When this neckline right here is broken, market's supposed to continue moving up.
Yes.
Are you getting it? Market's supposed to continue moving up. Structurally, that's what this pattern says. That's what the backtest has shown. However, because of the goddamn news, if all those news were positive for this pair, this would have spiked all the way up to this zone, which it did. The first zone, the first take profit zone, and the next take profit zone should be up here, around this level. Okay, that's the next take profit zone. However, look at what the news did. Look at what the news did right there. The news broke this high and it spiked up. Okay, now I moved my stop to break even, but what I did not do is to add more pips to that break even. So this resulted in me losing about $70 because of the spread. And there's something we call spread, guys. Whenever there is a news release, there is a very wild spread. As a matter of fact, during news releases, gold can even have up to 4 to 7 pips in spread. So even if you place your stop loss at break even, it will still minus some stocks from it. Did what I say make sense, yeah?
Yeah.
So because of that wide volatility, there is a wide spread, I moved this thing up to break even, but it came and took me out somewhere here. While it was supposed to take me out exactly at that level I entered, it took me out somewhere here, subtracting an amount from my account. And that was it. So why did I not enter the trade again afterwards? Is because I now saw that the volatility news up, down, I knew that the market was supposed to range. So I just left the screen. Okay, I just left the screen. If I did not leave the screen, I would have taken advantage of the comeback of this market and possibly take a profit right here. But this is a trade I did not take. So the patterns will keep repeating itself. So don't force yourself into it. Wait for the right entry, wait for the right conditions, and you take advantage of it. And that was it. That was how I ended my week. Massive profit and then a little loss for that Friday. And that was the only trade I took on Friday. Okay? That was the only trade I took because, of course, it is during my zone. Look at, I came around 11:30, market is ranging, nothing was happening, and then boom, I saw this break. I wanted to take advantage of it. Boom, I had my loss and done for the day. I don't need to fight and battle with that particular trade. And that is the mentality. That's the discipline you have to always give yourself. The week has been awesome so far. You took a small loss, exit, leave, enjoy your week, refresh your mindset, come back the following week to kill the markets again. That is how it's done, guys. Okay, so having said all this, I believe we understand how to at least interpret the um, news in forex now, right? Unless for the ones that you guys need to reach, especially unless for the ones that don't have some data. The ones that have data, once you see green, it is good for that currency. You see bad, it's if you see red, it is bad for the currency. Okay, and once it is green, good for the currency, it means that that currency will be bullish. And if the currency is the quote currency of a pair, you guys know what the quote currency is. It means it will be moving down. That pair will be moving down. If the currency, the result here is red, which is bad for the currency, that is bearish for that individual currency. What it means is that if that currency is a quote for a currency pair, that currency pair will be going up, it will be bullish. Does all this make sense?
Yeah.
Are we there?
Yeah, we are here.
Oh, beautiful, beautiful. All right. So the final thing we'll be looking into today will be, before our time elapses, we'll be looking into commitment of traders report. Another data that I don't joke with. I don't play with it at all. Okay, it is very amazing, and from the wealth of experience I've had, I can tell you that it only works for a few currency pairs, not for all anyway. You don't use the COT report for any pound pair, okay? You don't use it for any pound pair. Are you there with me? You don't. You only use it for, you use it for gold. It works for gold. You use it for, of course, the US dollar index, and most importantly, you use it for the euro pair, the euro, dollar, and the Australian dollar. These are the major currencies that it works for. Now, the question is, what is COT? What is COT report? Now, here is what it is. COT simply means commitment of traders report. For future traders, you see all these big boys, the hedge funds, the commercial banks, they are under obligation by the regulation agencies to publish to the public the positions that they take on any currency pair, whether it is commodities, whether it is metals, or whether it's currencies. They need to publish the direction they are taking, whether they are buying it or they are selling it. And that data is made publicly to every one of us. It's made publicly to every one of us. And believe me, these young men are, these institutions are people that have a lot of what? They have a lot of resources at their disposal. So if they are buying a certain currency, my brother, you know you want to be in the same side with them. Is that not so? If they are selling, you don't want to be holding. So this is you trading with the big boys, trading with the trend. Okay? You don't want to go against these guys. Now, The exchange that publishes this data for us is the Chicago Mercantile Group. We are going to look at the COT report now and see how we can leverage on the COT report. Okay, so that's what we're going to switch to right now. Let's go to it. Okay. Now, the COT report, if you just hit commitment of traders report, you will see the official report. Look at it here. I believe you guys can see my screen. Look at it here. The very first one, cftc.gov, commitment of traders. Boom. It is published every Friday, but the data is compiled every Tuesday. So what that simply means is they compile the data on Tuesday. The date that the data bears is that of Tuesday, but it is made known to us, the public, on Friday. That's when it is published to the public. Then that data that has been published on Friday, you as a trader will now use it on the forthcoming Monday. Are you there with me? Now, this is the data here. Look at this is where you get some of the data. This is commitment of traders right here, the one you have here. Then if you move down, you will see a lot of data being published. You see that of agriculture, petroleum products, blah, blah, blah. The one you are looking for is the what? The financial. Look at current traders in financial futures report, okay? You have current legacy report, the Chicago Mercantile Exchange. Are you seeing it? The Chicago Mercantile Exchange. Now, most people that go into commitment of traders newly, this is what they use. But I, as a researcher, I know of a way that will make this, quite easy for you. So this Chicago Mercantile Exchange. Now let's go to the short format, please. I don't need the long format for anything. Now look at the data for the short format here. You can see how uninteresting this data is, how dry it is, right? So you will see a lot of, you can go for currency. This is the first one here is butter. This one is milk. All you need to do is you keep searching until you get that for currency. This is Canadian dollar. Do you see Canadian dollar now, right? This right here is for the Canadian dollar. Now, you will see for this week, for this particular current day, you have how much in longs. The one we are interested in, guys, is the non-commercial. The non-commercial is for those big speculators, the big traders. The commercial data is for, commercial banks, people that are hedging their positions. There's something we call hedging, okay? Okay, just to break it for you, what hedging really is. Let's assuming that you make importations, right? But because of the fluctuations of currencies, you don't want the currency that you will be using to make an import to lose some value. So what you do is you go and hedge it in the currency market. So whether the value is moving up or moving down, eventually it comes to that center. Okay, let me give you guys an instance here. Let me make a typical example, I think, to drive this information home. You buy textile materials from a company in China. We are in May, right? You signed a contract to pay them $1 million for your container of textiles today. And the value of $1 million in Naira as of today. Since you are making your money, you are selling in Naira, right? You are making your money in Naira today. So what happens is this. As of today, where Naira to dollar is 600, the value is about 600 million Naira, right? You signed the contract today to pay them 1 million, maybe sometime in June, which is next month, okay? Guess what? For you in your financials, the cost of this 1 million to you today will be 600 million naira. But when it now comes for you to fulfill that obligation, when you sign, let's say sometime in June, when you're going to make the payment, naira is no longer 600 to $1. It is now, let's say, 750 to $1. Guess what it entails on you? It means that instead of paying the 600 million, the cost of the $1 million on you now will be what? 750 million naira. Are you guys getting the concept here? Now that is a whooping 150 million naira added on top. So how do you protect yourself from this kind of fluctuation in the market? That is what hedging is all about. So now that you signed the contract, what you will do is you will tell yourself, you bring out another $1 million and say, because of the nature of the economics of this particular currency, the naira in this particular example, this case study, is likely going to go up in June. So what will you do? You now sell your dollar and buy naira. You are selling your dollar today to buy naira. That is the amount that you have hedged. The amount that you have not hedged is the one that you have kept aside that you used to make that payment then. Two things will happen. Remember now, you have the $1 million that you've set aside, and then you have the possibly the one you bought today, 600 million naira that you kept cash. $1 million, you have it. In naira, you have 600 million naira in cash. You have these two. Now, fast forward to June, what happened was what? As you rightly predicted, naira is now up. What do? You now sell that dollar that you bought today. Are you getting the point? You now sell that dollar that you bought today, and it will now correspond to the $1 million. The profit you make from selling that particular dollar will now match the increased cost of the amount you are going to pay. I don't know if what I'm saying is making any sense at all.
Yes.
Good. Now, let's assuming that time reaches, but instead of the thing increasing as you had expected, it went down. You've lost money on that hedged amount, but guess what? That amount that you want to use to pay, you gained money on it. So the money you've lost here and the money you earned from the one that you put aside counterbalances each other. So that is what hedging does for you guys. And hedging is used by companies that are very financial savvy. If you are doing any business that requires that you get paid in foreign exchange, you get paid in euro, you get paid in US dollar or in any form, or you pay your salaries to, you have staffs working for you that you pay in euro, you pay in dollars, you have to understand hedging. It's going to help you a lot to save cost. Okay? So that is hedging, and that is what you are seeing here on this commercial data. Companies that are hedging are the ones that are tabulated under this commercial, and we are not interested in it. We are interested in the non-commercial. These are the big speculators, the hedge funds, the traders, like us. Okay, so these are the data. But guys, I know this data in itself can be boring like this, isn't it? Especially for you to figure out. So I'm going to give you guys a better way to assess your commitment of traders report. This better way is going to help you way more than this. And this is the page I use. I'm just going to show you this. I need to show you this is the original data where it comes forward. You know, we move from the hard to the simple one. And like I told you guys, you see how I simplify things. Most other people may be teaching you this. We just stop here. giving you that difficult. I like my life simple. Do you understand? In fact, that is why I chose this profession. I develop softwares, I do a lot of engineering, but I like the easy life. I want to, in fact, I believe real wealth is when you have freedom of time, right? And this is what this gives me. So, what I love, like I said, is simplicity. So this particular data that I'm going to show you now, this site, I'm going to type it for you guys. You're going to go to that site. It's going to help make things very simple. I think, okay, you can see it, I believe. It's going to make things very simple for you. Tradingstar.com, okay? If you go to tradingstar.com/COT, you get your COT report. And that is what we are seeing on our screen right now. You will see the COT legacy report for all the currency pairs. And like I said, you are leveraging on my knowledge and my experience. Don't use it for pounds. It will mislead you. Use it only for euro, dollar, and gold. All right. So let's see how it corresponds to the euro now. And let's see, even today, the analysis we're going to do today on the screen, I want you guys to closely watch it out the coming week. We're going to look at what it did in the past, then we look at what it's going to do in the future based on what we've figured out. So look at the euro right here. So I'm opening for the euro now. You can see this data is the most current data, the one published yesterday, this Friday. And you will see what it is telling us here. Remember, the data we are concerned is this non-commercial. What are we seeing here? The longs, whenever you hear long, it means buys, right? Short means sells. So the longs on euro is 200 and what? 8,449 lot sizes. These are the contracts opened for euro. Then the short on euro is 214,827. What are we seeing here, guys? Shorts are bigger than longs. Is that not so?
It is, yeah.
Are we there? Beautiful. Guess what? It doesn't stop here compared to what happened in the last week. That is, in fact, you see this data right here, this one that is called changes. That is the most important data for me in this COT report. This data is comparing what this new value is with what it was last week. So what it's telling us here is that 14,544 lots has been closed last week. Whenever you see negative, it means it's been closed. It's subtracted. Why positive means added. So what this thing is telling us here is that people, these big boys, are no longer positive on the euro. They are very what? Bearish on the euro. Why? Because they are closing a lot of their long positions and they are adding a lot of what? Short positions. Does this make sense?
Yes.
Short positions 14,000 plus was added and long positions 14,000 plus was closed. That means they are no longer bullish on the euro, they are bearish on the euro. Meaning that the euro for this data is going to lose strength. And if the euro is going to lose strength, what direction do we expect euro USD to go? Will it go up or down? It is the euro losing strength now. If the euro is losing strength, it means that you are going to need, will you need more US dollar to buy 1 euro or will you need less US dollar to buy 1 euro? You will need less. Therefore, will euro USD go up or will it go down?
It will go up. Euro.
It will go down because down means less dollars, right? Up means more dollars, buying 1 euro. Remember, dollar is the hot currency there. Are you there with me, guys?
Yes.
Does that make sense? In fact, we have actually done the analysis for next week here. So I am very bearish on euro USD for next week. Right now, you're using this data. But since this is just a new data, we can't gain enough confidence to know whether it's going to work. So let's do a little bit of back testing. Let's check some of the data using COT report. Let's check the previous data. This was for this month, May. So let's go for the previous month, April. I'm going to arbitrarily choose, say, 5th of, okay, let's choose 12th of April. Anyone at your own time, you do that yourself, okay? At your own time, but test as much as you can. Look at 12th of April, guys. Take a look at 12th of April for Euro. What do we see here? We see the long positions here is 221,645. While short is what? 182,000. In other words, longs are way bigger than short. Is that not so? Are we there? Longs are way bigger than short. And guess what? Compared from what it had the previous week, more longs were added for this particular week, and shorts were even close, still making the euro very bullish, very strong here. So for this entire week, I'm expecting the euro to go up. So let's go and trace this week on the chart. Remember the date. Remember I said that the date that this thing there is on a Tuesday. So 12th April should be a Tuesday. So what we are looking for is the Monday after that Tuesday. So let's go to my calendar. As of course, 12th April is Tuesday. So the Friday of that Tuesday is 15. That was when this data was published. And the Monday of that for this data is on 18th. Good. So if you check 18th on your calendar, it will show you it's a Monday, and Monday 18th April is when this data should be used. That means for that Monday we should be looking for a buy signal. We should be looking for a buy setup. Once we get a buy setup, we are taking it with full confidence that the market is going to give us an ample move in that direction. So let's switch to the chart and see if this actually works. Let's switch. Okay. We are rounding up soon. Our time is up, so this is the last thing we'll be doing, but let's just check it out to confirm. We'll still do more in our next section, in our next time, next class, but let's check this out first. So right here, we are checking the Euro USD. So this is Euro USD right here. So we are looking for the week starting, let me go to 1 hour time frame. We are looking for the week starting what? 18th of April. So let's go back to April. Market has been trending down here, but remember we said that time we are expecting market to go up. So let's keep going. Beautiful. So this is 18th April, guys. Check it out. I believe we can see the screen, right? Can we all see the screen? I guess we can. Now, this is where this is 15th of April, 15th, 17th. This is where 18th started. Guys, watch out. 18th started here. You already have a support zone and you have a trend right here. Watch out. What you are doing now is, look at this, guys. You have a trend here. This is your trend line right here. Boom. So this is 18th. You know you are bullish this week. So no matter any bearish setup on euro dollar, you are not taking it. But guess what? Once you waited patiently and you got this massive, and when did this move for that week started? Look at it. On the following day, data was supposed to be used on 18. Mondays, you know, Mondays usually behave anyhow. Mondays are not really a very good day to trade. But look at on Tuesday being 19th, see the massive impulse up. Boom. You missed this impulse because you might not have anticipated it. It moved out, broke your trend line, and it came back and it corrected. Now, on coming back up again, somewhere around here, guys, watch it. Watch it. You are in on this goddamn trade. you are in on this trade. Look at this hammer, this nice little hammer that broke here. Boom, you have entered right here. And where is your stop loss? Just below this zone right here. And look at it, for that entire week, all you have to do is to be managing your trade. If you are a swing trader, this is a strategy I actually give to my swing traders. If you are a swing trader, look at this, guys. From here all through that week, this is a whooping what? Over 130 pips for you. And this is as a result of your what? Your commitment of traders report. That bullishness of the euro being strong, that means you need more US dollar to buy the euro for this week. And look at it, the move started all the way from down here, boom, for the entire week up here. Like I told you guys, I have done enough back tests on this to be very confident in this. It's time for you to do yours. Look at the COT data, go through it and check how it corresponds, and you will agree with me that 95 to 98% of the time, the Euro USD will obey the COT report. Only for you to wait for that signal to come using your technical analysis. Take the trade, put your stop loss, watch it. You are good to go. So guys, this is where we're going to call it a day for today because our time has elapsed. I have other things scheduled to be done at this time. So I will see you guys within the week and possibly our next section in the next week. So this is where we call it a game, guys.
Thank you very much.
Thank you. So I believe this was a good one. We had a good understanding of what we treated. Does anyone have any questions? If you have any question, you can type it here on the chat. If you don't have any for now, and maybe you have another question much later, just bring it to our platform. So this is where we call it a day. All right. Thank you guys for your time, and I will see you next week.
Thank you.
Thank you.
All right.